So good afternoon, everyone. We're going to start our first Romandie Seminar of the Swiss Impact Investment Association. My name is Derek, and I welcome you actually for 60 minutes. It will be intense. We have actually 6 speakers, and the subject is Reconciling Tech Revolution and Impact Revolution. So what does it mean? Well, the idea is actually that we are at a crossroad. Impact investment was cloned in 2007 and has gradually scaled, and actually is growing really, really fast. But it is still far away from what we need. There are some numbers telling us that, for example, for the climate change challenges, we need $1 trillion a year of investments, and we are at 150 billion, which is actually 6 times less of what we need. So today, what we're going to do is see if technology can help us to scale impact, and data will be key. So what we're going to do is have first Christian present us some background information about SIIA and the market. And then we'll have 2 sets of speakers. The first ones will be actually here at Impact Hub. And thank you very much, Impact Hub, for hosting us. And the second 3 will be online. I will present them as we go. So I will just let now actually the mic to Christian, please.
Thank you very much, Derek. So good afternoon, everyone. My name is Christian Kinkombe. I am a member of the board of the Swiss Impact Investing Association. And in addition to that, I'm also a co-founding managing partner for the group and a partner of a new fund you'll hear more about today called the Invisible Hearts Ventures. So let us just to set the context of what are we talking about today. So as you know from the annual market survey of sustainable finance in Switzerland carried out by Swiss Sustainable Finance, there are 8 categories of what is known as impact sustainable finance. And so you have basically exclusions, you have norm-based screening, best-in-class ESG integration that you've heard a lot about in the media recently, ESG voting, ESG engagement, and sustainable thematic investment. And last but not least, you have impact investing. So yesterday, a new report was presented where we got the latest figures. These are the figures from last year, as Derek mentioned. Let me just, I managed to take a screenshot from the presentation yesterday. So the latest figure is actually that the capital market is more than 100 billion. trillion US dollars, and impact investing is 750 billion US dollars. It's just a small fraction of what we have on the capital market that goes into impact investing. So you can see the market size is quite small. The latest figures from the United Nations Development Program that we met with earlier today is that the developing countries, they need 2.5 trillion US dollars to cover and finance the SDGs in the developing countries. And because of the COVID pandemic, the total amount for the entire planet has now increased to more than 5 trillion US dollars. But nonetheless, these are amounts that are significantly less than the total asset under management in the capital market, plus what is known as sustainable investment, which is, according to the latest figures that we got yesterday, is 35 trillion US dollars. Basically, what are the major differentiators of Impact Investing Association? Well, firstly, we have an outreach to all of Switzerland. We cover both the French-speaking part of Switzerland, the German-speaking part of Switzerland, and we hope also in partnership with Impact Hub Switzerland network that we would soon be present in the Italian-speaking part of Switzerland. In addition to that, we cover the entire impact investing value chain that covers the suppliers, those who demand, that is mainly the members of the Impact Hub Geneva, where we are today, the intermediation of the service providers, the market enablers, such as accelerators and incubators, as well as policy and regulation. As I said, we are present both in the Canton Geneva and the Canton of Zurich. So the vision of SIIA is basically we are a globally leading network in impact investing, and we aim to establish Switzerland as the epicenter of impact investing. Our mission is to encourage all of these stakeholders that we saw before to jointly develop a narrative for impact investing for society to adopt by being a platform for best practice of impact investing. The value proposition is that SIIA is as an influential private cross-sector driven coalition is dedicated to driving more private capital to improve the lives and the environment, given the strategic position that SIIA achieves through alignment of its work with that of the Global Steering Group for Impact Investing, Global Movement, Swiss Sustainable Finance, Geneva Sustainable Finance. We collaborate also, tend to collaborate with Swiss diplomatic representations around the world. And basically, we aim to work towards a more diversified ecosystem. And last but not least, we are also using the so-called Chamomile platform as a way to connect all of those various stakeholders in the system. So back to you, Derek.
Christian, thank you so much for this background information. So as you can see, we are really at a nexus, and we're going now actually to listen to our first panelist. And David, can you maybe join the table? And David actually provide us some conceptual background to actually what data and blockchain can do together. I think maybe it'd be nicer for you to come here so that people can actually see you on Zoom.
We have more people online.
Okay. And don't hesitate to use the Q&A question in your comment box if you want to share anything. We'll of course have a Q&A session at the end. Thank you.
All right, thank you very much. So my name is David Ujoki, and I'm a sustainable finance lead at the International Institute for Sustainable Development. I'm going to speak about the tokenization of infrastructure and how basically blockchain technology can address some of the barriers of financing sustainable infrastructure more specifically. So Victor Hugo said once that nothing is more powerful than an idea whose time has come. And I think the time of blockchain has come, and I think it's going to play a very important role in the digitalization of finance, also in the sustainable finance space. So there are many definitions of what is blockchain, and I'm not going to give you one today, but I just like to say, so when people ask me, so what is a blockchain? I just say it is a trust machine. And I think that's exactly what blockchain is best placed to do. So what is tokenization? Tokenization is basically the digitalization of real world assets and financial instruments as well, using blockchain technology. So basically it's like securitization, but on a blockchain. So just briefly, just what are some of the benefits? What is the value proposition of tokenization in the infrastructure context? So first of all, it has liquidity. I mean, infrastructure is an inherently illiquid asset class, which of course, I mean, if you invest into a private equity fund, you have a 10-year lockup. So you have to actually price this in this illiquidity, which can be, according to research, it can be about like 40–60% as well. So blockchain can actually, so if you tokenize the infrastructure project, you can actually save this liquidity discount. Also, blockchain in the, when you tokenize infrastructure assets, then it can also lead to lower transaction costs. So for example, when we talk about liquidity, you could say, oh, that's great, but why don't we actually just go to the stock exchange, and list, like, as for example, what we see in the real estate space, you have REITs, real estate investment trusts. So basically there, you have the liquidity you want. That's true, but then for 80%, and the costs are much lower in case of security tokens. So I've seen something like 5%, but actually people are telling me that's even lower now. Also, you can have cost savings on the operations side. So by using smart contracts to automate some of the tasks, you can actually realize significant gains on that front as well. I think another benefit of tokenization is that you can access another pool of capital. So basically, when when you look at infrastructure investors, normally, they have to go to a private equity or private debt fund. They have a high minimum cost. Sometimes it's $1 million to actually entry. So what if we can bring it down? So what if we basically 10 francs you can invest into infrastructure? So how would it impact your cost of capital? It's a question mark. I think it definitely will have a positive impact because you actually extend the pool of capital that you can access with infrastructure investments. And the next point is better transparency. I think that again comes back to the blockchain's main value proposition of being a trust machine, that you have actually transparency and accountability. So think about it that you are an infrastructure investor and you can actually follow the infrastructure project on the operations side, on the financial side, and also on the sustainability side. So if you want to track sustainability performance, you can do so much better with tokenized infrastructure. Also, tokenization can provide, transaction, increase the transaction efficiency. So, for example, in the case of listed equities, for example, you have T+3 settlement time with blockchain instantaneous. So basically, you can have it immediately. Like the problem with T+3 that sometimes it's more than T+3, right? So, for example, if the counterparty is not delivering the stocks or the cash, then you can actually it can be much longer. Also, you have a counterparty risk, which is not the case when you tokenize infrastructure. Another point is really the overcoming the limitation of small size. So especially in the impact investing context, the challenge of financing small-scale projects is always there because basically the transaction costs are much higher in this case. So think about tokenizing, for example, real estate in Geneva. So you can also have a much more targeted portfolio construction. You can say, I want to be long on one street, so I want to buy the real estate in one street, but I want to short on the other street of Geneva, let's say. You can actually do it when you tokenize real estate or infrastructure. So it makes it possible to actually target your portfolio exposure much more precisely. And to close up my intervention, so basically there are regulatory challenges, and that I think very important to note. And I think it's, I cannot really spend too much time on it because I have like 5 minutes now to cover this topic, but I think this is a key part. So basically how you can actually be compliant with a regulatory framework that was designed for an off-chain world and still maintain the benefits of tokenization. So I think that's a big question mark. And I definitely want to see some answers there in this front. And of course, finally, you have technological challenges as well. So scalability could be an issue, cybersecurity, and of course, it's an emerging technology. So you will have some technology risk that you have to take into account. I actually did a report on this in 2018, and it's being updated as we speak. So I'm going to have a new report coming out just to show you how my thinking evolved in the meantime. I can definitely give you a spoiler that I'm actually very skeptical about some of the benefits and how actually blockchain can deliver some of the benefits that blockchain can deliver in the sustainable infrastructure space. So thank you very much.
Thank you very much. We will ask questions, I think, at the end. That would be the most efficient way of doing things. Now I want to welcome Fabien Toutassa from Havuta, and he's going to speak to us about actually a concrete example of how to use blockchain. Thank you.
Thank you, Derek. Hi, everyone. So I'm Fabien, co-founder of Havuta. Havuta is really born on the idea of building capacity at the local level and taking the other spectrum of the impact, whereas field implementers, NGOs, program implementers need to have to face that persistent data deficit that the development sector is facing. So basically providing technological tools and capacity building to field implementers to not only prove the impact to the investors and donors, but also improve it. So actually, when I have a private sector background, and when you steering projects, you have data coming in on a weekly basis, on a daily basis, on a monthly basis. You have indicators, you have measurements, you have performance, efficiency, and that kind of concept, those kind of concepts are very hard to implement in the development sector. So we do a pre-base, post-implementation measurement of impact, but we actually don't do daily, monthly, ongoing measurement of impact, so that you can steer development programs towards actually maximizing that impact on the go. And so we should, so Havuta is about facing really that topic, challenge, providing technology to organization implementing development programs to help them improve their impact back to their donors. So how do we, yeah, sorry, I think you missed my...
Just continue.
That's okay. So anyway, the technology we use is answering many of the actual challenges of collecting data to human beings in the field. We are blockchain based. As David said, of course, immutability and transparency is key in the sector, so that comes with it. We also implement our own tokens so that we can tokenize the data to the people who are actually providing it. So instead of interviewing them, having focus group, having all the traditional methods of evaluating impact of projects, then we want to empower organizations to do their own self-assessment, providing mobile applications that will help them connect with their communities and collect data directly from them, which will enable them to tokenize the data, reward the people who provide data. So in fact, you are actually, I don't know if you're aware of that study that was showing that the bag of lentils will improve drastically vaccine rates in India, even though vaccine was free. So we are incentivizing the data that is being sent back from beneficiaries to the organization through our own tokens. So we're actually using really the tech side of blockchain, not the financial side, but the tech side of blockchain to make beneficiaries actual provider of the information and provider of the impact information from directly back to the organization. And then the organization can use, as David mentioned again, tokenization, non-fungible tokens, creation of impact assets that can be brought back up upstream to investors and prove the impact of the organization, where they can then buy those tokenized assets, invest into new programs, and then generate more fundings for that organization. So trying to build up a virtuous cycle, but starting from the field rather than starting from the investment side. And so we really want to position ourselves as a base layer on how to collect data and to actually prove and report on evidence-based impact. Thank you very much.
Thank you so much, Fabian. So now, after having actually a concrete example bottom up, and we'll be able to build actually on that approach later on in the Q&A, we wanted to have the view of investors. And now is the turn of Wei Meng, who's based in Singapore, but has just relocated to Switzerland with his family, so welcome, and is working for Leonie Hill Capital, but is going to speak to us about the new project. So your turn.
Thank you. Bonjour. Yes, I'm from Singapore, but you know, pretty much we look at the lens. We look at the lens in a very global way, and perhaps because I'm given just 5 minutes, but I still want to introduce our background and the reason why I've traveled so many thousand miles to come here. Is very much, we think that this is an exciting time. I think we are really living in a very exciting time because of technology revolution. But this is not good enough. We've been spending more than 15 years as a family office to invest extensively into technology revolution. We have gone through from .com into data, into cloud, and to now is blockchain. And I think this is going to be still ever changing. But one thing I think I must emphasize that while as an investor, we invest into the future for profitability, to create enterprises, it's time for us to really think through what else can we value add. And this is why today I wanted to introduce that the mission that I'm living in Switzerland is to really create an invisible heart venture. I think everybody knows technology is disruptive and we are living in the fast-changing, fast-moving, fast-pacing world. As we progress, as we modernize, we need to have also a good heart. And I think this is where I want to bring the topic of digitization into a good heart. And this is where we want to work extensively with every one of you, whether you're a tech startup, whether you're an international NGO, whether you're in an advisory group. I think if we share the same purpose of moving this digital world into a modernized digital economy, I think we should also look at how do we create this for the good betterment for the society and the betterment of our environment. So the vision is very simple, but it is, in my opinion, is going to be very, very important for us to take the right step. And we are here to create measurable impact in all of the innovation and disruptive companies that we see in the market. And this is not just one VC's looking at this whole market, but we are trying to draw upon every one of us into an alliance and trying to build this as a force that we want to bring tech for good movement. And it's very important that, you know, we want to put the money to the right place. And we want to really be more aligned towards SDG for all this technology innovation. And I think this is very important. Of course, you are seeing that there's a lot of VCs now going into the impact. But what we want is to also work with all of the VCs as investors to go beyond the financial lens and be trained to practice how impact is measured, so that I think we can create more value to our investees, more values to the economy, and more values to our investors as well. So this is, I think, it's going to be our underlying footprint that we want to create this SDG impact measurement metrics onto all the technology companies. And we want to apply technology to really create this whole new era of enterprises. And I think we call ourselves, you know, the LIKE, which is a leapfrog impact technology economy. And this is what I'm calling upon all of you to participate, to work with us and try to bring this whole discipline of impact, not just for fund managers. It's more into like what our friend has just mentioned, at the ground level, at the base level, you want to capture the right insights so that you can capture those impact activities and statistics that you can replicate from India to Nigeria, from Nigeria to Colombia, right? So globally. So I think this is something that we're looking forward to fund. We are looking forward to work with you, and we are looking forward to guide entrepreneurs becoming tomorrow's impact entrepreneur. All right, thank you.
Thank you very much, Wei-Meng. So traceability and transparency is key, and I think technology like blockchain can definitely help. Another question is trust, and David mentioned the trust machine. You can also mention it as being some kind of a decentralized trust, but what is key is also what you do with that data. So we have now Yves Canazola from Access Impact, who's going to join us from online and leave you to your speech for 5 minutes. Thanks so much.
Yes, thank you very much, and good evening. It's a pleasure to be here. So as my name is Yves, and I'm a co-founder of Access Impact. It's interesting as I was positioned in the agenda, because in a sense we are doing a little of all the other parts. So in a sense, I will start by the governance and the trust, and I think the trust definitely we need to reduce the intermediary on having a better trust. And we also use on the system, underlying our system, an eco blockchain. We call it eco blockchain because it's a permissioned blockchain and it's validated among the stakeholders. So it's a multi-protocol and stakeholder, and we work on 3 dimensions. It's a measurement, the monitoring, and the monetization. So in a sense, we work in these frameworks that it's a local project-based validation by among stakeholders. It's monitoring by the IoT data on the stakeholder, and it's involving the monetization inside the system with 2 types of investor, or it's an ex-ante investor and the ex-post. And in a sense, at the end, we can also tokenize, but we don't tokenize because it's a permission, as I mentioned. On the governance, it's important. Of course, it's important at the technology level. It's the first part of the debate. It's what type of technology, why is the innovation in technology can bring this trust. It's important also the data, what type of Oracle, how we manage Oracle inside the system, and what's the data and the key metric. And I think that the precedent auditors was mentioning that the key area, how we create the value chain of impact and how do you extract the SDG and other type of impact, it's fundamental on it. And of course, the last time is the revenue sharing. And when we talk about the revenue sharing, it's a dynamic process from the ex-ante when we start the project with the cone of uncertainty up to the point where it has been validated by the multi-stakeholder approach, and it's a fungible product. And here we need a revenue sharing, a governance, because we need not to give to the value extractor on the intermediary too much of the value creation, but we have to give back in a dynamic way to the stakeholder, and especially the local community and the people that will keep the resilience of the model. So it's an integrated and a distributed network, and the distributed creates the resilience through this approach of collective action. That's in a nutshell. It's okay. You hear me? Or?
Continue. Yeah, it's fine. Okay,
sorry, now because I saw the technical people. So in a sense, what I want just to add that when we are talking about this SDG, always behind the SDG is a term of information, but behind that it's always and often wicked problem. And when we talk about wicked problem, we need to better understand the causality and the true value chain of impact, and we need not a centralized system, we need a disintermediate system, not obligatory a decentralized because it's more complicated to have a decentralized, but we need a distributed of knowledge, and creating this solution that stakeholders can be adapted from the different expertise on the local community will be key to fulfill the full spectrum of the SDG and all the co-benefit we can extract from the process. So it will be adapted to a nature-based solution, but it could be adapted to infrastructure project. Wherever there is a project that is ongoing and we need to validate on the dynamic process SDG and the co-benefits, we need to have the measurement, the monitoring, and the monetization connected inside, and having all the stakeholders having the trust and the validation of the model.
I need to see him.
Yeah.
Thank you so much for these perspectives. I'm going now to move to Louis Downing to have actually moving from the bottom up to a top down, meaning scale. We started the discussion by saying we need to scale impact. We need to scale 6 times based on some numbers. So people are thinking about the private sector, they're thinking about the public sector, but of course within that realm are infrastructures. And this is where actually Louis can provide us some interesting perspective as CEO of the Global Infrastructure Basel Foundation. Louis, it's you.
Great, thank you so much for the introduction. I'll start with 2 very quick apologies. Firstly, that I can't be there in person today. So we have this hybrid format, but thank you for making that possible. And secondly, that my colleague Lorena Zemp, who's much more knowledgeable about this topic, was meant to present and would also have given this panel a little bit of gender diversity. So I have to apologize that she had to step out at the last minute. But to introduce us, so Global Infrastructure Basel Foundation, we're a Swiss nonprofit. working to accelerate the mainstream transition to sustainable and resilient infrastructure. We're talking about large infrastructure projects. And over the last 11 or 12 years, we've assessed more than 180 infrastructure projects in about 50 countries to a combined capex of about $50 billion US dollars. And our theory of change is basically to bring best practice sustainability to infrastructure projects through assessment, capacity building, and financial incentives. So over the years, we've tried a few different ways of assessing infrastructure to see, how sustainable is it really, from self-assessments to in-person workshops to full third-party audits based on ISO auditing standards. And as you'd expect, there's a clear trade-off between cost and quality. So the more resources you spend in extracting and validating information from infrastructure projects, the more certain you can be that this information is accurate and useful. So to give one concrete example, we assessed a large municipal waste management project in North Africa recently. So a landfill that would be turned into a waste to energy plant. And one of the criteria that we check within our system relates to resettlement. And whilst on paper, no resettlement would be needed for this project, when we actually visited the site in person, we could see that there was really a significant number of people that would be displaced both physically and economically. Because after the project was completed, trash picking, so to speak, would no longer be possible. So this is obviously really, really important to know when appraising a project for how sustainable it is in terms of environment, society, and governance. But it's a good example of something which is largely invisible from satellite imagery or formal documentation or the kinds of information that you can get when you don't spend the resources to actually go there in person and see it. So to capture meaningful information costs money, basically. But unfortunately, what we've learned over the past decade is that placing a really high cost on certifying sustainability creates a huge barrier for asset owners to go to the effort of assessing and improving their projects, unless they're in some way incentivized or forced to do it, for example, by regulation. And sadly, the market today is really rife with examples of greenwashing, and you really see it everywhere. Claims to sustainability that are just not based on hard facts. So the main question that we're trying to address is, how can we provide good quality assurance of sustainability without scaring infrastructure projects away with huge auditing costs? And it's here that we think there's a two-phase strategy that we can use technology to get this done, which is basically the following. So firstly, we want to use technology to remotely assess infrastructure projects to get a most likely sustainability performance. So based on the SURE standard, which is the standard that we run. And to do this, we've got a few techniques that we're currently building out that use a combination of geospatial data processing and natural language processing on publicly available project documents like environmental impact assessments and social impact assessments, to then do an automated multi-criteria analysis to indicate the extent to which we can tell the project is looking good from a sustainability perspective or not, as it was. And some of the criteria that we're including are things like climate change impacts, like sea level rise. Will this project be underwater in 50 years' time? Impacts on biodiversity and habitat loss, and also benchmarking against industry standards for different aspects of project performance. So that's the first phase. And the reason this is really interesting is that we think we can do all of that remotely without any cost or time inputs from the asset owners. So we've just removed that barrier. And we could also do it without their consent, which is very, very interesting. So that's the first phase, using technology to do automated assessments of assets. Then the second phase is to notify asset owners of the remote assessments that have been conducted on their projects and what the result is. And what we've learned is that project owners whose projects are rated with, let's say, a red flag or an orange flag, very quickly want to know, how do I change that red flag into a green flag? And this is where some human inputs need to come in to better understand the project context and to fill in the gaps to provide a really high degree of assurance that this project is really built for the future. You know, examples like the considering the welfare of waste of trash pickers in the example I gave before. So there's quite a lot more to it all, which I'd love to explain, but I'm also aware of time. So I might leave it there. Hopefully that seeded a few ideas for discussion. And please feel free to reach out to me or my organisation to learn more about it, or to see if there's ways that we can assist one another. I know it's a very, very buzzing space at the moment. So as many sort of threads as we can tie together, the better. So thanks very much.
Louis, thank you so much for these very concrete examples and providing us a different perspective to the talks we've had so far. Now we're going to look to the future and be creative. And we have Michele Suavi joining us, and is working for Impact Scope and for IP Group, and is an expert in blockchain and cryptocurrency. So looking forward to the talk.
Hello, good afternoon, everybody. If you may go on the slide, should be next. So I'm presenting myself. I'm Michele Soavi. I'm blockchain lead at 4IP Group, and I'm trying to build up a bit on what has been said before. Thank you, that's fine. You can go on the next. And basically also bringing a bit my experience coming from an audit background. That's something which was mentioned before. It is nice to connect the dot and bring also this perspective on the idea really of extracting data for such a problem, for such an objective to use tokenization. So how can data be used? I mean, just to summarize quickly, what we have in mind, what we can use here is the blockchain as the register for which kind of information we may need. The information which is registered on the blockchain may be automated following a specific logic, which is somehow associated with a smart contract. And on top of that, we can put a token, which is the representation of a physical asset in the world. And they were already mentioned before. It can be enhanced also from a technological perspective with the use of IoT and oracles that basically are providing, if are reliable third parties, which are going to provide information which is going to be used for the blockchain, like whatever, weather forecast or whatever, to validate certain assumptions. And I would like, always to recall that at the end of the day, we're always dealing with people. And if people are not using correctly the technology, the blockchain itself and tokenization cannot really solve the problem. So next, please. And I would start with some meaningful questions, which for me are important really to get started to understand how to extract data and extract data which is valuable. That's always important to somehow being able to translate data into meaningful measure for impact, not mixing output with the outcome, because when we are talking about impact, there's another consideration to be taken into account, and the definitions tend to be a bit blurry still, and therefore it's really important to have a definition in mind. And secondly, the important as well from a technological perspective to be able to connect the token with the asset which is existing in the real world. That's why, for example, Bitcoin was the first asset, it was the first product which was proposed because it was native digitally, and therefore it's easier to take advantage of blockchain technologization as smart contract or something which was born on the blockchain. And it was mentioned already before, it's important, to be able to define previously how impact will be measured along the different steps of the value chain, how individual impact may be measured. That's important question to ask. And for sure, legal treatment. At the end of the day, before we were talking about security tokens, which from a legislative perspective are a much bigger burden other than utility token. Therefore, it's important to make sure that if the token you are offering is something which is tradable, there may be some investment expectation from the people, and it may be considered as a security token, and therefore legally it may be more challenging. Next one, please. And it's something interesting. It was mentioned before, in the sense that that the first point relates to the fact that it's a very good sign to use the blockchain if the problem we are trying to solve has never been solved in a different way. If there are a lot of different stakeholders with different interests around, that's always important. That's really a good sign that blockchain could be the right solution. Otherwise, something else would have been used, like a database to keep trace of the impact. Importance of the standardization, interoperability, reporting standard. It's nice, I was talking just after Louis with SURE and really bringing standards to really create tangible measures which can be used to assess impact. It was mentioned before the importance of incentives. Again, because if people are not dealing correctly with the technology is not working well. And such incentives or controls can be built into the system with a smart contract, which can give some rewards or penalties based on the behavior of the user. Well, the importance of understanding that measuring impact requires a long-term approach, in the sense that the output is not necessarily the outcome, and to understand the outcome, it takes a while longer. And well, availability of digital data, if we have already a lot of data concerning impact, which is available digitally, it's a good sign to be used as tokenization. And yeah, a flexible approach, because there are just so many things to be learned on the field. Next, please. And that should be next. Sorry. And just to conclude, the most important challenges relate to the fact that, okay, maybe we talk about tokenization, challenge, blockchain, and David was mentioning, for example, in the first presentation, that he was really somehow skeptical on the use of blockchain. And I partially agree, in the sense, again, that the people that use the technology has to use them correctly. Otherwise, blockchain and tokenization may not necessarily be a solution. It's a very complex environment, and therefore collaboration is key. But again, diverging interest and having a lot of different stakeholders involved may be a really good sign to use this, to give a reason to use blockchain and tokenization. And it was mentioning already as well, the difficulty in scaling up, because it's difficult to replicate a model to another context. Well, that's it on my side. I'm happy to open the conversation for the Q&A and get in touch with 4IP if we have further questions.
Michele, thank you very much for this discussion. Now we're getting to the Q&A session. If you have any questions online, don't hesitate to share. I will start actually with the key goal we have today, which is scaling up impact. And a lot of people actually want to convince the private sector to go into projects which are, let's say, in emerging or, let's say, frontier markets. And I was wondering if blockchain, tokenization, traceability, transparency could soon bring solutions for traditional capital from pension funds or maybe some funds or maybe even philanthropic to actually go to a more risky perceived project that maybe technology can mitigate through improved traceability. So maybe I will start with David.
Yes, so thank you very much. So basically my reaction to how to actually scale up impact is, you know, at the end of the day, it's really a supply demand problem. So like we have a very substantial supply demand mismatch. So basically we don't have a robust pipeline of projects that are bankable or investable. And so on the other hand, we have capital that's available, but there's some discrimination between the two sides. So for me, when we use technology, I would try to address both sides of the coin. Like on the supply side, I think you know what we can do, what basically blockchain can do is to maybe decrease some of the transaction costs involved in this project. So then, if you have lower transaction costs, then also then you can actually finance a much broader range of projects that were, for example, before uninvestable. It could be like small scale. That's maybe one way to look at it. So, for example, a small scale project can actually access capital that they could not do so before. And also, so just one note on the demand side, and then I finish is like, so, you know, some asset classes in infrastructure was not really accessible for certain you know, group of people, right? So for example, if you have, to invest in the private equity or private debt fund, your minimum sizes are very big, right? So that could also be interesting to see how we can actually address the demand challenges by actually democratizing financing sustainable infrastructure.
Oh. I don't know if someone else wants to respond to this question. Okay, so the next one. Okay.
Yeah. So the scalability is in two dimensions on our side, on our project. First, we differentiate the ex post and the ex ante investor. The ex ante investor is connected as a stakeholder from the start of the project. And in a sense, he has, as we mentioned, it's a wicked problem. So there is a cone of uncertainty. And when we start, we need some energy. The energy is linked to the amount of money we start inside the project. So it's a very private equity, very risky. But what is interesting for him is that he will be connected with other stakeholders, and he will receive the information from the blockchain from the start of the project, and he will receive the information from the different oracle. So in a sense, this investor is a very value creator, and he will be among the stakeholders. So then the project is ongoing. We add the pool of knowledge, we increase the quality of data, we understand, we reduce the cone of uncertainty. And then a third step, there will be other type of investors. The investor who want a fungible SDG, a fungible value created already. So in a sense, we can tranche inside the marketplace onboarding of asset manager from the very beginning to the end, and there is a tranche according to the cone of uncertainty. The second level, so it's a private public, easy because we can have blended financial product inside this onboarding. The second one is, as we mentioned, it's a multi-protocol with different co-benefit. On when a stakeholder is creating among them a level of protocol, this protocol could be moved to another project. So for example, we work on a project in Tanzania, it could be done in India. There will be some specificity linked to that, but the same owner of the protocol is not the company, is the stakeholder itself. So there is a very scalability because you can create new protocol and make a scalability on the platform. So there is a two dimensions, the financing from ex ante, ex post, on the owner of this as a stakeholder to create the protocol that could be exported to other projects.
Thank you very much. Another question actually related to that. A lot of people spoke about the ecosystem and that actually the blockchain is, let's say, an opportunity to link an ecosystem. I would also say that actually it relies on the ecosystem to collaborate in order actually for new solutions to emerge. If we look at other industries, supply chain, logistics, for example, so the projects who seem to move forward were the ones who could really bring most people on the table. So I was wondering if maybe the impact space would need at one point to create a commonality, a common ecosystem for those technologies to be tested and then maybe scaled according to some common rules or maybe, let's say, languages so that people can trust each other and scale together. So maybe Louis, you want to respond to that?
Oh, I'm very sorry. The sound quality was too poor for me to understand that question properly. I'm not sure if someone could rephrase it again for me.
No, the question, do you hear me now? Do you get closer to the computer then? Do you hear me now? Is it better now?
Now it's good. Now it's
okay,
very good.
Okay.
Thank you.
So I have to get closer to. No, the question was about the ecosystem, saying that actually for a technology like the blockchain to work, you need to bring together a very diverse group of people. And the example of logistics supply chains, the shipping industry and others actually really started to get forward with blockchain as a tool for traceability and bringing down cost when all actors around actually that supply chain start to work together. But my question is, in impact, is there an opportunity at one point to bring a lot of actors together to test, let's say, solutions and then scale common languages to really have impact down the road?
Yeah, absolutely. And there's probably other members of the panel who could comment on this as well. But maybe I could highlight an initiative which I think is launching next week, which is coming out of the ETH Zurich, which is, now I can't remember the name of it. It's called Restore. And its purpose, I think, is very similar to what you're describing. So it's basically using geospatial data and a community platform, basically to map not only elements of biodiversity and habitat, but also to map the actors and the programs which are involved in restoring nature around the globe, so that people can see, there's another organization who's monitoring that piece of forest, or there's the program which is overlaying on top of my program, so let's work together. But certainly, I think that's a really, really good question and really important to highlight the roles of different actors to actually, make this work effectively and efficiently.
And maybe to rebound actually on that answer, I want to go to the next step and say that actually blockchain will create a new space for innovation. And we heard about VC, we heard about actually startups. My question was about new types of financial instruments that could be enabled maybe through blockchain and trusted data. So I wanted to see whether Wimeng or someone else actually had maybe a point of view on innovation, actually on the products that could emerge that could not emerge if actually blockchain was not present.
I think that there's quite a few projects at the moment in the area. One is, I think, an interesting one based on non-fungible tokens, which is mostly today used for arts. So maybe you've heard some of the big sellings on digital arts. But tokenizing assets under the form of NFTs will create many opportunities for funding for small organizations. And so if the base organization, the small ones, implementing field development project can
actually display publicly their impact on projects they have, results they have, and then raise funds through those kind of platforms, like such as NFTs. This will definitely bring a collectivity or a group of investors down to those people doing a field job, and with the use or with the help and support of well, organizations like GIB, where defining standards and where measurement of impact can be standardized across the board with all organizations. And for sure, this is going to be a great improvement from top to bottom. I really believe in it.
Yeah, absolutely. I think just to add on is that the digital asset is definitely going to change how the financial instrument is going to be implemented in the future. I think in the topics of NFT, it provides a lot of those, I would say that people that wants to take part in innovation, they want to be also part of the stakeholding. And right now in our current world, you just need to be, you need to have some financial resources, you know, to that level for you to participate in IPO and etc. So NFT is a network effect, community-based to drive innovation. And I think this is very important for us as an impact driver, as an impact agent, is to inculcate all these impact values into the innovation project so that when people look at it, they can participate more easily and they will be able to then create broader access to capital. All right, so it's a win-win proposition. And I think this force, every government is looking at it very seriously. Yes, there's ban on certain aspect. In my opinion, tokenization is going to be ruling the future of capital. And therefore, with the access of this capital so easily, I think we are going to bring more opportunities to disrupt the world.
Great, thank you so much. So we have actually 2 minutes left. I wanted to maybe leave, let's say, the participants maybe the last opportunity to share something. But the key message is really it's an emerging space. No rules yet. They are to be defined. They will be adaptive, agile. But what is key is to have a network and an ecosystem. And I think actually what we try to do today with SIIA is to bring people together, to exchange views, and actually to try to work together over time. And now if someone actually has any last comment, and maybe my last question would be actually what can be done to accelerate, let's say, your respective initiatives? How can we help?
Well, I can go first. Just firstly to say thank you so much for organising this event, and I think the role that you play in bringing people together around impactful ideas is just so important. I think the initiative that I spoke about has just begun. So we have a lot of room for you know, partnerships and sharing ideas and shaping the trajectory. So your question, how could you help us? It would be to get in contact if you have good ideas or are interested in partnership or working together. Thank you.
Thank you. Anyone else? No? Yeah.
Can I speak from here? Okay. Being a little bit of an outsider, but listening in, I was wondering, isn't there some kind of a contradiction, a riddle that we have to solve? Blockchain the benefit is it's predictable and cannot be changed. Innovation is something about changing things, being novel. So the question is, with a blockchain, who owns the blockchain? How many people are involved in a blockchain? And who could actually change what is being inputted by the different actors? So that's my question. Thank you.
One thing about the immutability of blockchain is what brings, it's actually not going to make the data that is input into it better or or more precise or accurate. It's just the opportunity for everyone to see it and verify. So it's not about what goes into it is going to be better than today. It's just giving everyone else the opportunity to say, okay, this someone has said that at that time, and then maybe in 6 months I'm going to go there and visit and check that impact, and it was not right. So that will discard him publicly from being a relevant provider of information. As David mentioned, this is a trust machine. This is how it's going to work. The data on it is maybe not better than today, but at least it's public, and everybody can check it.
I think the key word here is transparency. And because of transparency in a very distributed manner, it provides the trust. So it's not about the how you manipulate the data. It's about the genuinity of the data, that everybody is very assured that these data are genuine, not manipulated.
Yeah, I mean, just a couple of thoughts on this. So basically, like I have the feeling sometimes, like on these parallels, that when we say blockchain, people think of Bitcoin, right? So the Bitcoin is blockchain, okay? But there's so many different blockchains out there, right? So basically, you can have private blockchains, permission blockchains, basically, which is controlled by a company. Like we have seen some of these, like JP Morgan doing their own blockchain. So those blockchains are clearly you can change, right? So that's the whole point. And so they're not immutable. So then you can also, so I think we have to be careful to use the blockchain, as just a blanket statement and, it's immutable. And I also, when I did my presentation, I said it's a trust machine. It definitely applies to some blockchains that are public and permissions maybe, but certainly not for all. And by the way, if you tokenize the infrastructure that I was talking about, you must be able to change transactions, meaning that you have to be able to reverse transactions. If you can't, basically you cannot have security tokens, because security regulation, financial regulation requires you to build in some features, including you have to give up immutability, by the way. So I just want to put it out there. That's why we have to be careful when making generalizations.
Great.
I know that Romandie has a train to catch at 6:15, but since there are people in the audience, I know they want to ask a question. We can take a couple more questions.
So we will say
Thank
thank you so much.
So I'm sorry, I need to make a move, but I hope to see you guys.
Okay. Yeah. Anyone else has a question?
About the immutability about the blockchain. Isn't it about misunderstanding to talk about immutability? Even if you cannot talk about what? Immutability, the fact that you cannot change transactions. It's not it's not on at all. Yeah. But actually, you can in the next transaction correct it itself. Of course, if you're thinking about data, like sensible data, with a DPR regulation. It's pretty tricky to use blockchain, but in itself, it's not immutable in itself. I don't know. I want to clarify that. Someone can.
So, anyone else? A comment or question?
Yeah, sorry if I may add on that. From my perspective, there are as many blockchain as you can think of, and as many products you can imagine which can be created in a blockchain. Thinking just about the development of NFT of the last year, probably 3 years ago, 5 years ago, that would have been unimaginable. And, I think there must be some kind of expectation and curiosity around, because this kind of challenge will be overcome. But the how is really the question, but a collaborative approach here, it's really the basis just to solve this kind of problems. But there are the tools. It's just a question of really, again, finding how from my perspective.
Maybe I will just add on this one, because I think we can even reverse. Because there is a trust, transparency, and traceability at the project level, we can have this distributed model and have this distributed knowledge. on moving from increasing the number of stakeholders and adding this pool of knowledge, probably we can better fulfill this kind of wicked problem and finding this solution and reducing the cone of uncertainty. So in a sense, it's because there is a trust inside this one that we can increase the number of people on moving gradually to some kind of collective intelligence. So I think it's even because of this technology that we can fulfill some of the wicked problem like the climate change and other way. So I think it's probably the tools to fulfill the governance around that one.
Great. Thank you so much.
I'll unfortunately have to leave now, but I'd just like to say thank you very much once again. Goodbye.
Thank you, Louis. Bye-bye. So just maybe to close, maybe what we could say about actually that technology, it is a technology. I would see it as an enabler of community because for the first time we have this decentralized trust mechanism that allows actually very diverse people to be connected, work together. And the outcome of the community could be solutions for climate change and others. And in doing so, the traceability and transparency can maybe also convince other type of actors, more traditional investors, to join you on specific projects to scale the impact. So I just want to thank all of you for your input and for the hours spent together. And I want to give actually the mic back to Christian and actually some comments made about the future. Yeah, thanks.
Okay, thanks a lot, Derek. So just in conclusion, so as we said, this is an event organized by the new antenna of the Swiss Impact Investing Association that is called SIIA Romandie, and which is the French-speaking part. So why collaborate with SIIA? Well, basically, we aim, as I said, to shape the impact investing efforts in Switzerland. The aim is also, as we've seen tonight, is to share knowledge, research, and best practices between the cantons and other countries, both in the North and the South Hemisphere, provide advocacy and policy support, either to the local government or to other stakeholders within the impact investing system, identify how impact capital can be used to achieve the SDGs and the climate objectives, and to identify and develop new opportunities for emerging market economies, and enable entrepreneurship, innovation, and capital to deliver impact at scale. What do we do? As I said in the beginning, we have a number of flagship activities. The most famous activity is called our annual SIIA Impact Summit that takes place in Zug, up in the northern part of Switzerland. And for the first time, the Swiss Impact Investing Association has been organizing a session amongst the 77 sessions that we have at the Building Bridges event that will take place on the 1st of December at 10:30. We also have monthly seminars and webinars. So we this month we have an in-person seminar, and next month we're going to have a virtual or a webinar, as it's called. And then we collaborate with other members of the Swiss impact investing ecosystem, such as Swiss Sustainable Finance, Sustainable Finance Geneva, the impact hubs, the 6 impact hubs in Switzerland, and other stakeholders. And the formal announcement will come at the Building Bridges event, but I can just give you a small insight that we are planning to establish a task force, which aim it is to set up a national advisory board for impact investing in Switzerland to join a global network of more than 40 national advisory boards around the world. Yeah, and then, as I said, an important part of that will be to advocate for Switzerland to become an impact investing hub. In terms of the timeline, as I said, we are aiming to have a monthly event. Most of these in-person events will take place here in the Impact Hub, Geneva, and after the event in November, we'll have that is the Building Bridges event, which is going to focusing on the rethinking of the mainstream in impact investing strategies. And then after that, in early December, we will have a webinar, digital webinar, to focus on the role of pension funds within the impact investing space. And then after New Year's, we are planning to have another in-person seminar here at the Impact Hub. Yeah, so that's all for those of you who are interested, by either those of you who are with us online or here in the Impact Hub Geneva, or who would watch the recording, because this webinar hybrid event will be uploaded on the SIIA website. Please feel free to reach out to either Derek or myself if you want to know more about what SIIA is all about, and if you want to join our association. So we can make a real change here in Geneva. So thanks a lot to everyone who was with us online, and thank you to those of you who are here with us in person. And have a good evening.
Thank you.
Thank you.
Thank you.